Good morning. Tuesday, July 8th. I'm Zach Howard. Here's a morning market update. What I got in my notebook today to share with you guys what I'm looking at. Tapped into the AI fortune teller last night to kind of give me an idea where the US is going with the whole fiat experiment, the whole monetary system that is a illusion. Really, at the end of the day, it's just an illusion. And the AI fortune teller said, well, let's look at the first country that really embraced all this craziness that is fiat money and took it to the whole new extreme, and that is Japan and the Bank of Japan. And its relation to that then is the Japanese yen, that fiat currency, the second biggest in the world next to the euro, next to the US dollar, king dollar formerly. What we're looking at here on the screen is a chart of Japanese government bonds and the ownership of those government bonds by the central bank, the Bank of Japan. We have this series down here starting with the JBG 370s, which is a 10-year government bond issued in 2022, 2023 era. This is when the central banks were printing money like crazy, negative interest rates throughout the world. At one point, there was $18 trillion at a negative yield of government bonds globally. Like so many countries, Canada was one of them as well. The Bank of Japan went in and bought the government debt because nobody wanted to buy it. Okay, it's a facade. It's a ponzi back and forth between the central bank and the government. That's what fiat and the monetary system is in today's era. The Japanese government owns the majority, or sort of the central bank owns the majority of that government debt. 86%, 87%, thereabouts, each of these vintages. So what is that saying for what's to come in the US? When there's so much debt and has to be continuously rolled over in the market. Remember, none of this debt ever gets repaid. The whole game is just to service the interest on it. Roll it over when it comes due, 10 years time, 20-year time, whatever the duration is. Japanese government has enacted yield curve control. They cap the rates so they can continue to put leverage on the balance sheet of that fiat money, that yen, to continue to keep the whole Ponzi going. Okay, that has resulted in not a real market. Without the artificial hand of the Bank of Japan, none of that liquidity through the central bank could ever be constructed. This, what I think, is on the verge of foreshadowing the US. Not in the next couple of months, perhaps, but in the year, 2 year, 3 year, it's going to happen under the current administration. We already have the Treasury Secretary, Scott Bessent, out there, potentially sits in 2 seats. The private bank, which is the central bank, the Federal Reserve, and the government joined at the hip. The Trump administration is already saying yields had to come down. We had to keep bond auctions at the low duration because we know there's not going to be enough market demand to buy our 30-year IOU promises of starting more wars. It's not going to be there. So we just got to continue to have low duration financing of those T-bill auctions to keep the whole thing going, to keep these $2 trillion annual deficits, 6.5%, 7% of deficit spending of the GDP in the US government. That's the game plan. That is going to mean the fiat currency is the relief valve for all this policy era, fiat monetary Frankenstein policy, whatever you want to call it. This is a chart going back 10 years of the Japanese yen versus the US dollar. The higher the number, the lower the yen is versus the dollar. Dollar, often referred to as the cleanest dirty shirt, it went from 104 thereabouts back in 2021 when they started doing this yield curve control really extreme, and devalued almost 60% at one point, here knocking around 146. That then translates over to the valuation of real hard money assets, whether that's gold or Bitcoin. The price rises in earnest there because you're measuring against something that can't be created at will, like the central banks create this fiat money. This is the price of gold over that same time frame, and you can see it's more than doubled in that same backdrop. Fast forward to Bitcoin, similar moves, 2 things that the government can't control through their money printer, and you see the reflection of the debasement show up faster when you measure it in gold or Bitcoin versus other fiat currencies. At the end of the day, DXY, which is this chart here, is after the worst start in the 6 months to start the year since 1973 when US came off the gold standard in 71. But it's really not an accurate reflection because you're measuring the DXY through the lens of the euro, through the lens of the Japanese yen, the Canadian dollar, UK bond is an index of all those fiats together. They're gonna work together to keep all this from imploding and really blowing up. But if you look through the lens of gold, Bitcoin, it's easier to see. And it's not just US is on this path, Canada is on this path, the UK is on this path. All these fiat currencies are dealing with the same issue. It's just math at the end of the day. There's nothing they can do about it. Hard assets, that's where the relief is going to be seen because people are going to wise up and say, this doesn't make a lot of sense anymore. Bitcoin and other alternatives is where the puck is going because people are choosing to tune out. That's what I got for you today. Not a lot of market action. Yesterday, some more tariff headlines and all that, but like the bullish catalysts remain. Zoom out. How do we measure all this stuff in? Is in the fiat money. It has to go higher. The money supply has to go higher. Have a great day. We'll see you tomorrow.